What's going on, guys? Welcome back to the channel. That's my line.
What's my line?
That's
then?
not your line. Dude, you always try to steal my intro. Just tell them to hit the like button and subscribe to the channel if they have not already.
He always tries to steal my shine.
But I guess he's right. Hit the like button and subscribe to the channel since he knows everything and I'm just the dummy sidekick here. Third time is a charm, baby. What's going on, guys? Welcome back to the channel. I hope you guys are doing great and you are excited to be buying the dip. This is no way, shape, or form going to be a FUD video on AMC like I never or ever have once done. This is not to say AMC is over. It's not to say it couldn't go lower. It's to acknowledge what is going on today, what is causing the markets to sell off in this extreme fashion. You guys can see the Nasdaq's almost down 2%, Russell 2000's almost down 2%, the Dow's even down 1.5%, and that's seen as your rush to safety. So we're going to be going over what is going on today, as well as how low could AMC possibly go. So hit that like button for me, consider subscribing to the channel like my dummy over here said. Love and appreciate you guys. Let's dive into it. So first things first, the reason why the markets have been selling off can be summed up in this paragraph right here. Goldman Sachs and Signature Bank, as well as brokers Charles Schwab and Interactive Brokers, began rolling out fourth quarter earnings results early Tuesday. Bank stocks were generally lower Tuesday after falling Friday as the quarter's first round of bank earnings failed to impress investors. So the banks go first, and that's really a sign of what is to come, and we're seeing expenses at these banks going through the roof as they are all paying their employees, their top 1% or so of their employees, astronomically high amounts of bonuses and incentives to stay at their firms. So that's hurting their bottom line very bad. You're also seeing less trading revenue that is coming in, as well as some other minor stuff from bank to bank to bank. So not impressing investors, and that's usually seen as the bright spot in the markets. If bank earnings are good, the other earnings tend to be good as well. If the bank earnings are bad, that's kind of a foreshadow of what's going to come with other companies' earnings. And let me just put this into English. High inflation is bad. It means if a company says, hey, right now we expect to produce or bring in $5 billion of revenue by 2025. Well, if inflation's 5% per year, then that $5 billion in 2025 is going to be like, let's say $4 billion of actual buying power by 2025 because inflation eats away the buying power of your dollar. So that's bad. The Fed tightening is obviously bad, raising interest rates, making money harder to get, more expensive to acquire, to borrow and lend out. So that's obviously not good. Those two things, very, very bad. But it's all worthless. It doesn't mean anything if earnings are good. If earnings are good, it offsets those two negatives, turns into a positive, right? Hopefully that makes some sense to you guys. But if earnings are bad, the whole thing comes crumbling down. So that's what we're looking at right now. If earnings start to come in really, really bad, just expect to see a lot of pain, as 36% of NASDAQ companies are down over 50%. Typically, you will only see NASDAQ companies down 12.5% if the NASDAQ is down 10%. The NASDAQ is down 9% and 36% of companies are down over 50%. This is unprecedented. And what this is telling you is the same thing that I have been saying for a very long time now, is the markets are propped up on weak stilts. I sound like a broken record now. I've been saying this for months, for literally months, and it's finally coming to fruition. You got your Apples, Microsoft, Facebook, Google, Nvidia, Tesla. The top 10 companies account for over 50% of the NASDAQ, and those are the ones that are really keeping the NASDAQ afloat. So if those stocks start to dive 10% a piece, 15%, expect a 20% correction into a bear market. So that's what we're looking at. As far as AMC is concerned, AMC is something in and of itself. But that does not mean that it is immune to what happens in the markets. The markets in the short term trade off of fear and greed. That's why Warren Buffett's one of his most famous quotes that has always stuck out with me. It says, in quote, "The stock market is a tool used to transfer wealth from the impatient to the patient. I can't believe I just screwed up Warren Buffett's quote. You guys get it. People that are patient in the end always win if it's a good business. Now, AMC, you could make an argument for the fundamental case right here where we sit at about $18 per share. I think it's pretty clear. The fundamental valuation is around $20 per share. So could we continue to drop? Sure we could, because the markets trade off of fear and greed, as well as the outrageously high margin debt. Take a look at the margin debt outstanding. If we just go to Google, do margin debt outstanding. Crazy. Look at this, man. Look at this. $918 billion. This is up over 100% over the past 2 years. This also does not take into consideration the SBL, the security-backed loans that are out at the major banks that total in between $500 billion and $1 trillion in total. That's what the rich guys do. They don't go into margin debt. They go to their bank with a billion-dollar portfolio and they say, hey, I got this billion-dollar portfolio, let me get a loan on it. The banks say, oh yeah, definitely, and they pay 3% instead of paying 30% in capital gains taxes. That is the unlimited money glitch. If you guys have seen that video before, it's a key if you are wealthy. That's something that I will personally implement once the morass happens. It's something I do recommend a lot of people do as well, as long as they are safe with it. But nothing is obviously a recommendation here on this channel. Let's circle back to AMC. What's going on today with AMC stock? So, we're currently down 9.77%. Are you worried? Am I worried? No, I'm not worried whatsoever. We are at this lower line that I have had drawn out for a while now at about $18.50 per share. We hit that low at $18.56 per share. So we are right on this level, and I want to see if we do hold up some strength right here. But it's very possible the next green day we get, we see a bounce to the upside. We're riding the lower Bollinger Band, so this is not a good sign. The 20-day simple moving average is way up here, and the MACD is going slightly more bearish as of right now. A lot of people say we have a gap to fill at about 1750. I think it's possible, but I just don't think we're going to stay at these lower levels for all too long. But we will go ahead, for the people's sake, go ahead and mark 1750 as best I can right here. 1746. So, you know, if tomorrow is red too, we could go to 1750, but I don't think we're staying under $20 for all too long, because once the market's correct, it's going to at least go back to that fundamental valuation, which is around $20 per share. As far as the volume for the day, we're only looking at 21 million shares that have traded hands. So this, to me, off 21 million shares that have traded hands today and down almost 10%, that not too many people are actually selling as far as retail investors are concerned, that you're just seeing a lot of shorting. Imagine if 2 million shares were shorted today, that would do a lot of damage and push the stock down 10%. So I really think it's a shorting frenzy that is currently going on. We will soon hit a bottom though, rest assured on that one, because why would you not buy AMC at $18 per share when people, hedge funds, were buying the stock in the mid 40s, the mid 30s, in the mid 50s? Doesn't make a lot of sense when you think about it that way. But if we take a look at the Ortex data, we are seeing that short interest is climbing yet again. 19.71% short interest of free float, 101.12 million shares that are sold short, almost a 3% short interest change for the day. The borrow change is 3.13 million. So that would make sense if, you know, my theory is correct, that you're just seeing a lot of shorting today. 3 million shares out of 21 million shares that have traded hands for the volume would cause this move. As far as the share utilization, you're looking at 74.27%. The days to cover at 2.48 days to cover. So in that aspect, not too much has actually moved around. You're still seeing the days to cover ticking up, and this is still looking really, really good. Once we do see a bounce, we'll see the stock go through a mega bounce, a crazy bounce, and the days to cover will shoot down as well, like we've seen in January and in June. But I've went over that a couple of times. You guys probably get the idea on that one. As far as the max pain for this Friday, it is at $22 per share, so that would be an upside of about $4. So keep that in mind. The max pain is signaling some possible upside right here. If we do take a look at the Stonk tracker data, and that's what we're going to wrap it up on, as well as my thoughts to end it off. We're still looking at out of the money calls at about 680,000 for this Friday. In the money calls at 61,000. In the money puts at 154,000, and out of the money puts at almost 250,000. So if we do see a bounce, you'll see a lot of calls go from out of the money into the money, and you'll also see a lot of puts go from into the money out of the money, causing that, you know, two fronts of buying power potentially that could come from the market makers. So we're either setting up for a continued sell-off, or we're setting up for a big bounce. I don't think there's going to be in between just muted days. I think we're going to see a lot of volatility, and I think you guys should be buckled up and ready for that. As far as the lowest point I think AMC could possibly go, I mean, the lowest point possibly, shit's going to have to get really bad in the markets, but 15 is probably the lowest I think we could go if the fear just continues. And to be honest with you guys, I thought this whole liquidity situation, this fear, would really come Q1 2022 earnings, not Q4 2021 earnings, not the earnings that we are getting right now, the next set of earnings, which would come out in April, May-ish. So those are my thoughts as far as how low we could possibly go. When the pain is going to be over is once the fear is over in the marketplace. We're propped up on very weak stilts, so it's not going to take a lot as far as misses on earnings to drive the stocks down. The silver lining to all of this is patience pays, especially with AMC. But if you are somebody that wants to make fat tendies, wants to make a lot of profits, and wants to make a lot of money playing the downside as well, learn options. If you guys want a friendly space to learn options and to get all of my trades, check out that link down below in the pinned comment. We have been killing it. Just closed actually a Roblox call for about 60% profit today. That was a bit of a, not a day trade, but I made that trade on Friday, closed it out today. So a lot of other trades were in, some lucid puts as well. Just if you guys want to be a part of that, hit that link down below in the pinned comment, as well as support the channel. If you guys want to get totally free stock with Moomoo, Public, and Weeble, check that out as well. Link down below in the description of this video. Love and appreciate you guys. Let me know what you are thinking. How are you feeling down below in the comment section. With all of that being said, you guys enjoy the rest of your day. I'm sure I will see you guys later on today as well. I will see you in the next one.